I thought we would come in today, and the news would be that we would have a possible red wave that would indicate that Congress is going definitively to the Republicans. Instead, what we have is what I call a tepid win by the GOP, given the fact that they had so much against the Democrats, whether it be immigration, whether it be crime, whether it be inflation. And it shows me that the status quo, I believe it's actually women voters, thank you to my friend John Ellis for a minute, that saved the day for the Dems. The reason why all this is important is that we have gridlock, just of a different form. We don't know if Kevin McCarthy is going to be at the top, if he's going to be the speaker. I would tell you that now it's on to the next, which is CPI.
Yeah, and gridlock is historically a positive thing, and we are past the midterms now. And as we've pointed out earlier this week, stocks tend to rise after midterms. But yes, to your point, CPI tomorrow, big event, right? We do have Treasury yields higher today, which is generally negative for equity valuations. You're seeing that today.
By the way, remember, the algorithms are set up to sell the NASDAQ when interest rates go higher. So that explains a lot of what you see on your screen.
Yeah, and it's still a lot of this rotation out of NASDAQ, a lot of those mega cap tech names into those. You highlighted last night on Mad Money, 10 of these old guard stocks that are making a comeback. We own a handful on that list, whether it's Eli Lilly, J&J, Honeywell, Starbucks, just to name, to name some.
And again, we speak openly between each other. I believe that Nucor gave a presentation yesterday. Now, this is my favorite steel company. The rules are that you never buy a steel company going into recession.
That's why we sold it higher.
That's why we sold it higher, 4 times earnings. I now believe, after speaking with them, looking at the presentation, they're the biggest winner of all the funding from the federal government. You need steel for roads,
infrastructure spending.
For bridges, you need steel for the CHIPS Act. They are the biggest winner for federal money. And they've been contacted, and they're going to be building roads all over the country, and Bechtel's doing things, and Fluor's doing things, and it all involves Nucor. By the way, interesting enough, you're supposed to buy American, but there's no other steel maker that makes the stuff. None. They have no competition for all the kinds of steel that is for infrastructure. So they can actually make their quarter and then some from federal money. So I am saying we come down tomorrow on CPI. I may come to you and say we got maybe Nucor's time.
Yeah, it'd be interesting. Definitely wanted to do some more digging. And it was an analyst day, investor day yesterday.
And,
good balance sheet still. They buy back stock.
One of the things you need to know as we get into middle into November that you're going to begin to see. You want stocks that are actually up, because a lot of people have big gains. We do too, and you have to match them with losses. You will not sell winners over the next 30 days.
Well, let me ask you, do you think tax loss selling is coming into play in some of these mega cap names like Amazon, for example?
Typically too early. Tax loss selling, remember, because a lot of people want to do avoid wash sale, but they tend to want to sell in end of November. And I would tell you that we ourselves are on the hunt for things that could make it so that we don't have such a big. It's not a tax bill we have a bill which is that all profits and capital gains, income, have to leave the trust. Now, a lot of times when you're trying to figure out what the trust is worth, whatever, remember, most people don't have that dilemma. And I don't want to deplete. We gave $500,000 to charity last year, and I think that's great. But obviously, losses are of some value to perhaps you at home and to us. Losses are obviously not something you want, but they're clearly visible. I will not say that we're going to sell Disney.
Okay, let's jump to Disney right now. We got the earnings last night. Disappointment, obviously. Direct-to-consumer losses.
Great note.
Thank you. Direct-to-consumer losses well above expectations. Now, they did say it was the peak quarter in terms of losses, and profitability should start to improve from here, leading to fiscal year 24, where they do expect a quarter. But
do you have any reason to believe them when they say that, in light of what they said previous to this quarter?
Look, I think they have a couple years to do it. They are putting in price increases on Disney Plus. The ad tier launch should help that, and they talked about some cost rationalization as well. I do want to believe them in their.
You do?
Yeah, I do. But they got a long journey ahead. But I do think that the near-term losses are much heavier than expected, weighing on earnings, which is why you see such a bad reaction in the stock today.
Well, I mean, I think that what's happening, and I analogize to NFL, like I like to do because the NFL is very rigorous, is that when you have that level of revenues, you should have expenses lower. Their expenses are, I'm going to say, out of control. As if the man doesn't know how to run a large company.
Right. We're talking, it was around 400 more million in operating income losses just in the direct-to-consumer business.
Now, they had recently had a meeting down at Disney World. That would have been a very good time to call people like us and say, listen, we're sorry, our expenses are running out much higher than we thought. Of course, they're not going to say out of control, but this is one of the most disappointing quarters. And I want for people who are trying to figure out why, say, I have so much anger, which I do, you need to actually read the conference call. You need to read what Chapek says at the beginning. It reads like he just won the Super Bowl. This man is 0-8.
So we talked about last night, don't want to leave the franchise because they are still producing incredible content, robust demand, still at the theme parks into the holiday season, but management has to do a lot more and a lot better.
And no rigor, faced with one of the great franchises of all time. To screw it up like this is unconscionable. They need someone else at the top. I'm trying to generate more names. I have to tell you that I don't know who wants it right now. It's such a mess. But to not acknowledge, I mean, even Zuckerberg, and I say this because Zuckerberg is regarded as being incredibly arrogant, came out and said, look, I screwed up. I made mistakes. I have to cut people. I believe, by the way, that that's not the end of the cuts. I believe it's the end of the cuts. That's me. So I like the fact that the way Zuckerberg owned up to it is very different from the way that Chapek did.
All right, guys, let me just come in here and talk to you. We will get back to the meeting in a little bit. But let me know if you have Disney in your portfolio. I have a couple Disney shares, and I am hurting right now. I did not expect that quarter to go that way. I did not expect that Disney would have missed the quarter. But just want to give you two alerts. I'm going to get back to that in a minute. So you can see the disappointment on Jim Cramer's face. You can see that he's very, very disappointed. It's like somebody gave him some bad news, like somebody died or stuff. But sometimes I think Jim listened to a lot of the CEOs and he take it to heart. And sometimes what could happen is that he could come out and he could give us some stuff, some information, like some of the misses he had with things like PayPal, where he did listen to them and that didn't work out. We have Bosch Health, where we listened to them and that didn't work out. But Disney, very disappointed, in the red, a lot in the red. But my advice to you is to stay strong, because this is theme parks. Don't pay too much attention to the Disney Plus and ESPN. What I would do is just continue to hold the stock, which I will, and so hopefully things will get back soon. But hold the stock. It would be nice if Disney would introduce a dividend, but it has not done so. But so just doing some house cleaning to give you two things that just happened. I came on here a little bit late. The investment club did buy some more shares of Pioneer. That's PXD. They bought 25 shares of PXD. For the people that are in my Patreon, guys, you would have gotten that notice earlier on. And for the people that I didn't do any videos here yesterday, people that are in my Patreon, please check when I don't come here. You have a video every morning. So I just want to put that out there that I don't come here every day, but if you're in my Patreon, you'll get a video every day. So and they did sell some shares of Lindy. So they sold 50 shares of Lindy. I'm paraphrasing here. If you're in Patreon, you'll see that number, the correct number. And they did buy Pioneer Natural Resources, which I'll try to get on here, and buy Pioneer also in a little bit. So let's go back to the club. I think they have a lot to share. So let me just go back and hear what Jim Cramer had to say as they continue going forward with the morning meeting.
That's important.
So we're gonna hold Disney here, probably not add, but
you can't add, but you need a change.
Yeah.
And now let's look at Meta. Okay, so why does this go up so much? Well, because people believe that he didn't care, that Mark Zuckerberg did not care about whether the company would make money. He does care. He doesn't care at the state or pace that you may want it and I may want it. But the fact is, it surprised people that he did care. The package is very generous. There are a lot of people laid off. I'm telling you, it's not the end of the layoffs because he wants to get, unlike Chapek, expenses in line with the revenues.
Right. And so today, 13% layoffs of its staff, more than 11,000 employees. So very significant.
Yes.
Fortunately, they do get a very nice compensation package, but it's never enough.
They doubled the number of people they hired since the pandemic began. That was just bad reason.
Yeah. But I think a lot of the focus is going to be on that 2023 total expense outlook, which was just well above expectations when they reported not too long ago. They're going to lower that to 94 to 100 billion, down from 96 to 101 billion. But they do still say they continue to anticipate the operating losses in Reality Labs in 23 will grow significantly year over year.
We have a token position. This will not stand, given the fact what he just said. Now, remember, the OPEX going down, CAPEX is what we care about if you're trying to figure out, should we sell semiconductors? No, you don't sell semiconductors on crypto either, because Ethereum had used NVIDIA, and the new Ethereum had cut NVIDIA out.
Right.
So this is the first quarter without any Bitcoin, without any Ethereum. So let's keep that in mind. We do it. So we covered the layoffs. I'm sorry to be reading here, but Cisco, Evercore comes up with something highly unusual.
Yeah, they do a tactical outperform. I'm usually wary of these tactical calls.
Or the Evans Lab.
Yeah, but they do say they think the company's in line to report modestly ahead of street expectations. Some reasons why, finally, that backlog, which they've been building up because they haven't been able to have that supply chain deliver to convert the backlog into revenues. That's finally going to start to happen. Meanwhile, they think the setup for calendar year 23 sets up well for the company. So we'll see what they say when they report, I believe, next week.
Yes. Be careful,
but good to mention.
Orders are good. And I do want to point out that oil's down, inventory build, Occidental bad quarter. What we're seeing is, I think the SPR is no longer going to be depleted now that the midterm election is done. I've been waiting for Pioneer to come down. We've not played Pioneer perfectly. We can lower our basis. That's something you and I will go talk about.
Yeah, 9% yield around here, so we'll go back and
9% yield, even though with Treasuries at 4.5 for the 2-year, I like a 9% yield. Mm-hmm. I think the stock's going much higher. I'm Jim Cramer with Jeff Marks. Morning meeting exclusively for CNBC Bet.
All right, guys, welcome back. Just wanted to, for you guys that just joining me, if you didn't look at the video and you're just looking at the video, just remember that the investment club, I just want to repeat that, did buy Pioneer. As you heard, they just talk about Pioneer. So they did buy approximately 50 shares of Pioneer. I will go here once I leave here. I will go to Robinhood and I will buy 50 shares. Just wanted to talk quickly about Meta platforms. You could see that things are changing for Meta because they did do some layoffs. So Meta is doing better. Sometimes regret not buying it sooner, but it could only go up from there. So Meta should be a safe bet, but still be careful because tech is really hard. Tech is suffering right now. So be very careful buying some tech, because I know I did buy Google and I'm done in that. So just be careful. Take that with a grain of salt before you start making any buys once you're doing that. So I still believe in companies like Starbucks, but I see the oil companies that give you the great dividend. Now is the time, so I'm going to go buy PXD. So I try to actually stay in cash a little bit. If you have some cash, can I reserve it? Especially if you're doing margin. And for the people that does not understand what margin is like you're using somebody else's money. And if you get to us up over a certain level, they will sell some of your stock. So just be very careful if you're using margin. Anyway, guys, thank you for watching the video. I'll try to come on here tomorrow and I'll see you on the next video. If it's the first time you're on my channel, please don't forget to comment and subscribe, and I'll see you tomorrow where we do another more reaction, listening to the CNBC Club and giving my input on the stocks we're making. Just before I leave, please consider Starbucks. I'm in Starbucks also, and I try not to recommend stocks that I'm not in, but I know stocks are doing good. And if you're not in Disney, let's wait and see what's going to happen, because normally when a stock fall, it's normally 2-3 days of it falling. So don't be, if you're not in Disney and you want to get in Disney and you like Disney, consider it, but kind of stay calm and kind of wait, or maybe until tomorrow. Anyway, guys, thank you for watching the video. Please don't forget to comment and subscribe. See you on our next video.